One bank now controls more silver than most countries will ever see, 750 million ounces, accumulated in silence over 15 years. And they just flipped their entire position from short to long. Someone knows what is coming. This is not speculation. This is documented data from vault reports, delivery records, and position disclosures. Numbers that tell a story most people will never hear. Because while you were being told silver is a bad investment, while analysts were saying gold is better, while the price was being held down year after year, one institution was doing the opposite of what they were telling you to do. They were buying everything they could get their hands on for 15 straight years. And now they own more silver than any private entity in recorded history. Let me show you exactly what happened. Because once you see the timeline, once you understand the strategy, you will never look at the silver market the same way again. 2008, the financial crisis, banks failing, Lehman Brothers collapsed. Bear Stearns on the edge of bankruptcy. Bear Stearns had a problem. A massive short position in silver. One of the largest bets against silver in history. They were drowning in it. When a bank fails, someone has to absorb their positions. Someone has to take on the risk, the liabilities, the exposure. JP Morgan stepped in. They bought Bear Stearns for almost nothing, pennies on the dollar, a fire sale, and with the bank, they inherited the short position. Now, most institutions in that situation would try to unwind it, close it out, minimize the damage, get out as fast as possible. JP Morgan did something different, something that would take 15 years to fully understand. They kept the short position, and they used it. Here is how the strategy worked, and this is important. Pay attention to the mechanics. A short position in silver means you profit when the price goes down. You have sold contracts you do not own, you borrowed metal you have to return, and you want the price to drop so you can buy it back cheaper. JP Morgan had this massive short. Every time silver tried to rally, they could sell more contracts, flood the market with paper silver, push the price back down. And they did, for years. Every rally got capped. Every breakout got smashed. Mysterious selling pressure appeared whenever momentum built. Traders called it manipulation. Analysts pointed to the pattern. Something was suppressing silver. Something big. In 2020, the truth came out. JP Morgan was caught. They paid $920 million in fines, the largest penalty ever for precious metals manipulation. They admitted to spoofing, fake orders, manipulating prices. Everything the conspiracy theorists had been saying for years turned out to be true. But here's the part nobody talks about. While they were pushing the price down with paper, they were buying physical, real metal, actual silver. Every time the price dropped because of their selling pressure, they bought physical at the suppressed price. Other hand, same bank. Push down with paper, accumulate with cash, repeat for 15 years. Let me show you the numbers. Because this is not theory. This is documented vault data, 2012. JP Morgan had roughly 5 million ounces of silver in their vault. Almost nothing. Barely registered. 2015, 50 million ounces, 10 times more. Accumulation beginning to show. 2019, 150 million ounces. Acceleration, serious buying. 2024, 500 million ounces. Now we're talking about scale, real control. January 2026, 750 million ounces, 15 years, from 5 million to 750 million, 150 times larger, the biggest accumulation in modern commodity history. And they did it quietly, no press releases, no announcements, just vault reports that most people never read. Now let me put 750 million ounces in perspective, because numbers this big are hard to grasp. Global silver production. Every mine on Earth combined produces roughly 830 million ounces per year. That is total annual supply. JP Morgan alone holds almost 1 full year of global production. 1 bank, 1 vault. Almost an entire year of mining output from every silver mine on the planet. The COMEX exchange, the place that supposedly sets silver prices. They have 32 million ounces available for delivery. Registered inventory. JP Morgan has 23 times more than the entire exchange. 23 times. The London market, the LBMA, supposedly the largest silver market in the world. Total holdings around 790 million ounces. JP Morgan alone has almost as much as the entire London market. This is not a position. This is control. This is market dominance on a scale that should not be possible. Now let me show you what changed. Because this is where the story shifts. This is where accumulation becomes something else. Between June and October of 2025, JP Morgan did something they had never done before. They closed their short position. Completely. 200 million ounces of shorts. Gone. Zero. For 15 years, they benefited from silver staying low. The short position made money when prices dropped, and the drops let them accumulate physical cheaply. But in the second half of 2025, they eliminated the short entirely. For the first time in their history, JP Morgan has no bet against silver. They are now completely long. 750 million ounces of physical metal. No offsetting shorts. Pure exposure to rising prices. This is not a small shift. This is a complete strategy reversal. And it tells you one thing with absolute certainty. They are done accumulating. They are ready for prices to rise. Let me show you the math, because this is where it gets staggering. JP Morgan holds 750 million ounces. Every single dollar silver goes up, they make $750 million. Not per year, not per month, per dollar. Silver goes from 100 to 200. They make $75 billion. Silver goes to 300, 150 billion. Silver hits its inflation-adjusted high from 1980, which would be around $600, $450 billion. Do you think they accumulated 750 million ounces to watch silver stay at 100? Do you think they spent 15 years and billions of dollars building this position for no reason? They did this to make hundreds of billions, and they positioned themselves right before the move. Now let me show you who was on the other side, because when JP Morgan makes hundreds of billions, that money comes from somewhere. It comes from everyone who held paper while they held metal. It comes from everyone who trusted the system. It comes from everyone who sold physical during the dips they engineered. This is a wealth transfer, and it has been in motion for 15 years. Every time silver crashed and retail panicked and sold, JP Morgan was buying. Every time analysts said silver is going nowhere, JP Morgan was accumulating. Every time the price was manipulated down, they were loading the vault. But now they are positioned. 750 million ounces. No shorts. Pure long exposure. The transfer is about to accelerate. Let me address the obvious question. How is this legal? How can one bank accumulate this much of a commodity without intervention? The answer is simple. They did not break position limit rules, because most of what they hold is physical, not futures contracts, not paper. Metal. Position limits apply to derivatives, to contracts on exchanges, to paper positions that could distort price discovery. But physical holdings are different. If you buy actual metal, take delivery, store it in a vault, that is not subject to the same limits. So JP Morgan stayed within the technical rules. They manipulated prices with paper, paid the fine, and kept accumulating physical. By the time regulators realized the scale of the accumulation, it was already done. 750 million ounces sitting in vaults. Legal, documented, unstoppable. Now let me show you why this is not just about JP Morgan, because this position has systemic implications. 750 million ounces represents roughly 90% of annual global production. If JP Morgan decided to hold and not sell, they could single-handedly create a supply crisis. They would not even need to do anything aggressive. Just hold, do not sell into the market. Let supply tighten naturally. Industrial buyers need silver, solar manufacturers, EV producers, electronics companies. They need steady supply. If the largest holder decides not to provide that supply, prices go vertical. Not because of speculation, because of actual physical shortage, and JP Morgan knows this. They have spent 15 years studying this market. They know the supply dynamics, they know the demand growth, they know the deficits. They positioned themselves at the choke point, and now they control the valve. Let me show you the timing, because this is what makes the position flip so significant. They closed their shorts between June and October 2025, right before the major moves in silver, November 2025. Trump administration adds silver to the critical minerals list, strategic importance recognized, January 2026. China restricts silver exports, 70% of refining capacity locked down, January 2026. Silver rallies 65% in 1 month. Biggest monthly gain in decades. JP Morgan flipped to long right before all of this. Coincidence? Or did they see it coming? When you are the biggest player in a market, when you have more information than anyone else, when you have connections at the highest levels, you hear things before they become public. You position first, then the news comes out, then the price moves. By the time regular investors figure out what happened, the smart money is already positioned. Now let me show you the delivery data, because this confirms everything. In January 2026, delivery demand at COMEX spiked. Traders were not just holding paper, they were demanding physical metal. And who was providing that metal? JP Morgan. On January 7th alone, they delivered 8.1 million ounces. 99% of all deliveries that day came from JP Morgan. Everyone else combined provided 1%. 1%. This tells you nobody else has metal to deliver. The vaults are empty except for JP Morgan. So when delivery pressure builds, when traders start demanding real silver instead of paper promises, only one institution can actually provide it. And that institution now controls the market. They set the terms. They decide who gets metal and who does not. This is power. Real power. Not just financial. Structural. Let me show you the historical parallel, because this has been tried before. 1979, the Hunt brothers, Nelson and William Hunt, Texas billionaires. They tried to corner the silver market. They accumulated roughly 200 million ounces. They drove the price from $6 to $50. They squeezed the shorts. They had the market by the throat, and then the system fought back. COMEX changed the rules. Silver Rule 7, liquidation only. No buying allowed. The hunts were leveraged. They had borrowed to buy. When they could no longer support the price, when forced selling was the only option, they collapsed. Margin calls they could not meet. Bankruptcy. The price crashed from 50 to 10. The squeeze was broken. So the lesson everyone learned was, you cannot corner silver. The system will stop you. The government will intervene. But here's what everyone missed. The hunts used leverage. They borrowed. They were vulnerable to margin calls and rule changes. JP Morgan used cash. They bought physical. No debt. No leverage. No margin. You cannot margin call someone who owns the metal outright. You cannot force liquidation when there is no loan to call. The hunts had 200 million ounces on leverage. JP Morgan has 750 million ounces paid in full, 3.75 times larger. Zero leverage. Completely different risk profile. If the hunts with 200 million could drive silver from 6 to 50, 8 times higher, what can JP Morgan do with 750 million? The math is terrifying. 8 times higher from current levels would be over $800. I'm not predicting 800. I'm showing you the scale, the precedent, the leverage they have. Now, let me show you what they probably see. Because institutions this size do not make moves this big without reason. Industrial demand, exploding. Solar panels need silver, no substitute for conductivity. Global solar installations accelerating. Every panel needs roughly 20 grams. Electric vehicles. Every EV uses more silver than traditional cars. 50 million EVs per year expected by 2030. That is massive silver consumption growth. 5G infrastructure, every tower, every base station. Silver in the connections, artificial intelligence, data centers, millions of servers. Every server has silver in circuits and connections. Microsoft spending billions. Google spending billions. Amazon spending billions. All building AI infrastructure. All needing silver. This demand did not exist 5 years ago. Now it is accelerating, and supply cannot respond. 70 to 80% of silver comes as byproduct of other mining. You cannot just produce more. You have to mine more copper first. New mines take 7 to 10 years to develop. Even if companies started today, new supply would not arrive until the 2030s. Demand growing, supply constrained, deficits for 5 consecutive years, inventories draining. JP Morgan sees all of this. They have analysts, they have data, they have models, and they positioned accordingly. Here is what happens next. And this is not prediction. This is logic based on position and incentive. JP Morgan has 750 million ounces. They want maximum profit, maximum return on 15 years of accumulation. What is the optimal strategy? Let supply tighten. Let demand grow. Let prices rise naturally. Do not flood the market. Do not sell into strength. Hold. Let scarcity do the work. As prices rise, their position grows in value. 750 million times the price increase. Every dollar is $750 million in gains. At some point, they start selling. Not all at once. Gradually into strength. To industrial buyers who have no choice but to pay. Solar companies need silver to produce panels. They have government mandates, deadlines, contracts. They cannot stop production. They pay whatever silver costs. EV manufacturers, same situation. They have production targets. They need the metal. Price becomes secondary to availability. JP Morgan sells to these buyers at elevated prices over years, maximizing profit. And by the time they finish selling, they have turned 15 years of accumulation into hundreds of billions in gains. This is not a trade. This is a decade-long wealth extraction strategy. And we are watching it enter the profit phase. Now let me show you what this means for everyone else. For people holding silver, for people thinking about it. If you own physical silver, you are holding the same asset that the most sophisticated bank in the world spent 15 years accumulating. That should tell you something. They did not do this for fun. They did not accumulate 750 million ounces as a hobby. They see value that the market has not priced in yet. If you are thinking about silver, you need to understand that the largest holder just flipped to long. They are no longer suppressing. They are no longer betting against the price. For 15 years, JP Morgan's short position was a ceiling on silver. Every rally got capped. Now that ceiling is gone. The entity that was holding prices down is now positioned to profit from prices going up. That is a fundamental regime change. If you are trading silver, you need to understand that JP Morgan can influence this market in ways no one else can. 750 million ounces gives them leverage over supply, over delivery, over physical availability. They can support prices. They can create shortages. They can decide when and where metal is available. That is not a free market. That is controlled supply. And the controller just switched from wanting low prices to wanting high prices. Let me address the skeptics. Because I know what some of you are thinking. This sounds too convenient, too neat. One bank accumulates for 15 years and flips right before the big move. That does not happen. Except it does happen. Because institutions with information, advantages position before events. That is how wealth gets created at scale. Retail finds out after the move. Institutions position before the move. That is the game. JP Morgan has connections. They have access. They have information flows that regular people do not. When policy changes are being discussed, when export restrictions are being planned, when strategic classifications are being considered, they hear about it and they act before it becomes public. The silver critical minerals designation, the China export ban, the industrial demand acceleration. None of this surprised JP Morgan. They saw it coming. That is why they flipped to long. Now let me show you the signal that confirms they are ready. Lease rates, the cost to borrow silver, currently elevated. Above 8% annualized in some markets. High lease rates mean tight physical supply. People are paying premium rates just to borrow metal temporarily. If JP Morgan wanted to suppress prices, they would lend silver, flood the lease market, drive rates down, make shorting easy. But they are not. Lease rates are elevated and staying elevated, which means JP Morgan is not lending, they are holding. That is the signal. When the largest holder stops providing liquidity, when they hold instead of lend, it tells you they want scarcity, they want tightness, they want prices to rise. And that is exactly what is happening. Let me give you the conclusion, because this is not complicated. JP Morgan spent 15 years building the largest private silver position in history, 750 million ounces, more than most countries, more than the exchanges, more than anyone thought possible. They used a short position to suppress prices while they accumulated physical. They paid fines, they got caught, they kept buying, and now they have flipped. No more shorts, pure long exposure, positioned for rising prices. This is not about whether silver should go up. This is about the largest player in the market betting everything that it will. They do not make moves this big without confidence. They do not accumulate for 15 years without a plan, and the plan is entering the profit phase. Now, if this continues, the wealth transfer will be historic, from those who sold during the dips to those who accumulated, from those who held paper to those who held metal, from retail to institutions. JP Morgan will be on one side, with 750 million ounces, making hundreds of billions as prices rise, and everyone who ignored silver, who believed the suppression was permanent, who trusted the analysts saying it is a bad investment, they will be on the other side, watching. By the time it becomes obvious, by the time the price reflects the reality of JP Morgan's position, it will already be too late. The moves that matter happen now, while the story is still being called conspiracy. While people still think the bank with 750 million ounces is just lucky. Someone is positioned right now. Someone owns physical. Someone opted into the same trade that JP Morgan spent 15 years executing. The question is whether you see it or whether you wait until everyone else does.